Got a different kind of video for you guys today as we get out of the office and just kind of reflect on what's been going on in the markets. And not just in the markets, just generally speaking for the economy, because there's been no shortage of excitement and volatility. It's just been pretty wild when you think about it. But when it comes to what we're expecting to happen, it's basically on track. We've been looking out for increased levels of volatility, more emotion, and this year has been a perfect example of that. And I actually think it's going to continue to ramp up. So anyway, just a bit of a different video. I'll be sitting outside in the sunlight. It's a beautiful winter day here in southeast Queensland. But what I'm going to be covering here, I've got a few notes here I'm going to be checking, is sentiment. Going to talk a bit about TradFi, because that is obviously extremely important when it comes to crypto as well. Also going to talk about some cycle timing. So just to kick it off, I want to start off with sentiment because I think sentiment is probably one of the big ones. And while Bitcoin especially, and stock markets too for that matter, and real estate, everything is at near record highs or at record highs, the sentiment generally speaking is pretty flat. At least from what I've seen on social media, from my YouTube analytics, and this is specifically over the last month or so. But even prior to that, we haven't really had any crazy behavior since the end of last year, since Bitcoin broke 100K, and since Trump got into office. That was absolutely insane in terms of sentiment. And if I'm reflecting back even further, it wasn't even as crazy as the March peak, March 2024. So this is important because I don't think it's possible to get a major final top until sentiment goes over the top. Now, because we've broken to new highs for Bitcoin, I'm expecting there to be some more extreme levels of sentiment than we've seen both from the Trump top and also from the Drake top, or the March 2024. That is more anecdotal, but I think it's important. But to get some hard data behind that as well, we have those indicators I've been sharing with you when it comes to alpha analysis and the traditional Bitcoin Fear and Greed Index. And like they've pointed out, like they've indicated on every major peak, we get some synchronicity there with FOMO and extreme greed, and we haven't seen that in the last month or so. So sentiment is still looking good, or at least indicating we have further to go in the cycle. When it comes to stock markets, many are breaking back into new all-time highs again, and we certainly haven't seen extreme levels of stock market excitement yet. Again, a little bit anecdotal, but at every previous peak, I've had at least a couple of people reach out to me saying, what do you think of this stock? Or just kind of not necessarily bragging, but just mentioning how well their retirement funds are going, or something to do with their stock positions. Now, I haven't seen that, yet. I do suspect it's going to happen again when we do get a bit frothier in the stock market. But I guess anecdotes aside, in terms of this cyclical analysis that I share with you guys, and more so with members of TIA, it is still indicating that this cycle has further to go for stocks. So we have anecdotes, we have the actual cycles and data. So, I just fail to see, bringing this back to crypto, a major downturn in crypto if the stock market cycles are still suggesting further to go. If anything, if we're still yet to see some more exuberance in the stock market, I think Bitcoin especially is going to eclipse that by a factor of, I don't know how many, 2x, 3x, 5x, or whatever it is, in terms of just going over the top. There's a lot of things indicating that there's still further to go. The other things to kind of consider here are the US dollar analysis. Now, I've been getting closer to the US dollar for you guys for a number of years now. Firstly, how we were looking at for a major lower high, which I believe we now got at the start of this year. And not only that, a larger breakdown. The US dollar is a good lead for the rest of the economy, and typically what we expect to see as we get into the late stages of an economic cycle is a weaker US dollar. Now, we had that top early this year. The US dollar has broken down and it's continuing to trend lower. So until the US dollar finds a base of some sort, that's just another piece of the puzzle to indicate that stock markets have further to go up, Bitcoin has further to go up, real estate has further to go up. So this is where we kind of get into more of the science behind it, and the US dollar being one of those scientific pieces, if you want to call it that, when we're looking at cold hard facts and data, that's still pointing in the right direction. Now, it's not about getting dogmatic or blindsided by what has typically happened will happen again, because of course past results aren't indicative of future performance, so we're told. But when everything's lining up to suggest things are going to continue moving as anticipated, at least for me, I just keep going with it until proven otherwise. And we're only going to get that proven otherwise when the price actually reverses and breaks some key levels, some of which I've mentioned with you guys many times before. But trends are still up in the macro, and this is specifically looking at the macro timeframes. Everything's still on track. Copper is another piece of the puzzle, which I've shared with you guys as well, looking out for higher uses of copper, higher prices in copper, and that's another chart. If you go back and look at the actual prices, they are still continuing up in the big picture. So copper is important because it's one of the, if not the most heavily used industrial resource, and that being the case, if the economy is still expanding or perceived to be expanding, or rather anticipating further growth, we'd be seeing higher prices in copper, and we are seeing that shape up as well for a larger break higher, and we're expecting that to continue. So until we start to see some breakdowns in copper, that's just another reason to expect the cycle has further to go. Many of you will be familiar with my time chart that I've shared many times before. Now, I have been crossing between the traditional space and crypto as well with what I'm talking about here, but they are intertwined. They do relate to one another. But the timing chart I've been sharing with you has suggested that it would be very uncharacteristic for us to be seeing a top in crypto just yet. The cycle's only about 900 odd days from the bear market low to the current all-time high for Bitcoin, and that's just outside of the tolerances I'm watching for a bull market cycle. Now, I'm not expecting this bull market to be a mirror image of the previous bull market cycles, but in terms of tolerances, time-wise suggests there's still further to go, which means we will be seeing a new peak. Now, of course, Bitcoin's pretty close to making a new high already, and if and when that new high comes about, we can start to do some more calculations to anticipate how much further the market will go in terms of time. Now, you notice I haven't mentioned price. Price, I think, is the least important piece of the puzzle. You don't want to get too hung up on a price target, which almost everyone does. And I mean, I kind of get it. If you're new, you want to know what price you should be selling at or what price the market's going to top out at. But price is the least important piece. It's all about the cycles. It's all about timing, because if you get timing right, the price can be wherever the hell it needs to be. But if you know time-wise it's getting close to a peak, then you just sell at whatever price that is. It doesn't matter what the price is, because when the time is up, the price will reverse. That's something I've showed you guys on the channel before, and something the master W.D. Gann taught in his books and courses, which of course I'm an avid Gann trader and analyst and investor as well. So don't get hung up on price, just worry about time. So that time chart is going to be one I continue to update for you guys regularly on the channel. Something which will be a key indicator are the corrections into the top. They typically speed up in that we see short, sharp corrections south, which are bought up very quickly before price extends and goes over the top. We haven't seen that yet, so that's a key factor of what I'm looking out for in terms of time to let us know that we're closer to a peak. So this is really just a bit of a ramble, if you want to call it a ramble, but just thoughts on the market with what we discuss. Usually heads in the charts and in the data, but I think sometimes it's good to step away from the screen and just have a think about it in a bit more of an abstract way. Think about the different elements and if everything still appears to be going to plan, and if not, what isn't going to plan and what to do about it. But from where I sit, things still just continue to tick along as they should. And you'll notice that I haven't even spoken about any news, because the news is secondary. Cycles come first. Markets often rhyme. They don't repeat exactly, but they do rhyme. And there is a rhythm and a heartbeat to what they do. The news just seems to fall in line with what the cycles are meant to do. And if you've been watching my channel for long enough, you will certainly see that has been the case. So news is one thing. I think where we sit in the cycle, the news is going to lead to more extreme emotions and volatility. I kind of touched on that in the introduction, and we've been seeing that this year. So just keeping that in the back of your mind, when you see some big headlines come out or big volatility come out, it's just going to throw a lot of people off their game. That's the way it's always been, and I don't think this time is any different. Now, when it comes to market structure, I know many of you like my Elliott wave analysis, which is suggesting there's still further to go. And when we put together the pieces, like I have been, or at least discussing them in this video, when it comes to the traditional space, the macro cycles, sentiment, time analysis, you can see how that all still fits in with what we're expecting when it comes to the market structure and Elliott wave, which to me, the highest probability play is still for there to be a wave 5 extension. If this is new to you, you can go back and watch my previous videos where I discuss market structure, but marrying together the traditional space, cycles, timing, and market structure, you can see how it all still fits in, and it's indicating we have further to go. Now, it's always important to have invalidation. I have invalidation levels because maybe I got this completely wrong. I haven't been reading the market correctly. I'm following the wrong cycle, or whatever the case may be. So you have to remain humble and know that nobody has a crystal ball and nobody gets it right all the time. So you need to have those lines in the sand that if they break down, you have to reassess what you thought was going to happen versus what is actually happening, because you need to follow the money. And if the money is dumping their bags and support's breaking down, and the typical technical levels you track to suggest strength and weakness are suggesting weakness, then you're a fool just to blindly expect something to happen because your analysis said so, because you have to accept that sometimes your analysis is wrong and you weren't following the markets correctly. So, should we get those breakdowns, I'll be reassessing and having to reconsider, but, they haven't broken down yet. And so far, things remain on track, and we're looking like we are going to be seeing higher prices. So I will leave it at that for my bit of a market ramble as I enjoy some sunlight here. It's been a while since I've done one of these kind of videos. So, do let me know if you prefer more of them. I think it's been like 7 or 8 months since I did the last one. If I get enough feedback from you guys that maybe you want to chat once a week or once a month, let me know in the comment section below. But, I'll leave it at that.